17th September is important for gold. Why? It's the Fed policy. So, what if it's the Fed policy? What does that have to do with gold? Let's dig deeper. Gold prices are up more than 10% from mid August. Why? Expectations of Fed cuts and probable structural rally again. Now, one can simplify and break down the drivers of gold into two: uncertainty and Fed rate cuts. We wrote about the structural driver of gold in our Market Insights Monthly last year for May 2024 here, and about the last four key gold rallies in our Market Insights for March of 2025 here. Back to the drivers. Anything that causes a sense of uncertainty, like wars, tariffs, recession, also sharp inflation, tends to give strength to gold. And the second driver is Federal Reserve rate cuts. Now, the Federal Reserve is the central bank of the United States. Now, we can call them as a structural driver of sorts. Why? Because once rate cuts begin, they go on for a while before they end, unlike war and tariff related uncertainties. So, like in this chart here, Fed rate cuts have always led to strength in gold. Let's come back to our Market Insights note where we wrote about the four key rallies in gold. The first rally started in September of 2023 around the Israel Hamas war. The second around February of 2024 on uncertainty led China buying. The third rally starts around May of 2024 on Federal Reserve rate cut expectations. And the fourth started around November of 2024, just after the US presidential elections and broad tariff related concerns and impact. Now, of all these four rallies we spoke about, only one rally, which started in May of 2024, was a structural one and was led by Federal Reserve rate cut expectations. After the fourth rally in gold on tariff concerns, markets were not very hopeful of any appreciable Federal Reserve rate cuts in 2025, though the Federal Reserve had forecasted two rate cuts totaling 50 basis points for the year. Now, why was that? Because continued commentary from the Federal Reserve board members reflected increasing concerns around tariffs.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.